Welcome to the Treasury Update Podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the Treasury Update Podcast, host Craig Jeffery sits down with Brett Turner, CEO and founder of Trovata, to discuss why real-time cash visibility matters. They explore Brett's career journey in the startup world, the concept of real-time, steps to achieving true cash visibility, and ways to overcome key impediments. Listen in to find out how to access valuable cash insights to position your company for success.
Welcome to the podcast, Brett.
Yeah, thanks, Craig. Thanks for having me.
I love this topic, why real-time cash visibility matters. But, I know that's a huge area of focus in your, current role and as part of your career now. But I was wondering if it'd be okay if you just gave us a bit of a background on some of your career highlights. And then I just want a quick overview of Trovata for those who may not be familiar with it. So maybe you just tell your career highlights.
Yeah,
first.
Absolutely. And we're talking real time, so it feels like my career has been being in startups. It just seems like there's nothing not real time or not high impact. Things move pretty quickly in the startup world. But a little over 20 years experience going back to my day starting out as a CPA at Deloitte. Moved into high growth startups, though, a couple of years into my career in the Seattle area. And was a controller for a few high-tech, high-growth companies. A lot of time spent in ERP systems and financial reporting, really as a gap specialist in a lot of ways. And that carried me through for a few years, 3 different companies. And then these are in startup environments. So in a lot of ways, I'm sort of, Trovata being my 7th startup. So in the early days, my first 3 startups, I was learning, I suppose, more what not to do than to do. Great learnings, but all 3 companies actually ended up failing. I felt like I was getting an MBA in every one of these companies. And even my family would say, like, how are you becoming successful and getting better at being in failed companies? And so, but there was, in those days, was just, learning so much. And I would kind of have my own post-mortem after each company and a couple of these were high-profile startups. One of them was a $1 billion startup called Teledesic. It was broadband via satellite. Bill Gates and Craig McCaw came together. So I think a lot of it was helping shape and be discerning. Where I was always heading in my career is wanting to be entrepreneurial and start something at some point down the road when I was ready, but really taking this accounting finance track to get there. I took some time off from those 3 startups and went to work at Amazon, managing their SEC reporting, and then moved into a CFO role where that sort of intersected a lot from on the cash side. Was a CFO for 3 different venture-backed startups, and now post Amazon, that's when things really started to click. This company, Worldwide Packets, was in telecom space. We had just an amazing team. And built that company up and then later successfully sold, had an incredible run. And that's sort of for me in the startup world where it put all the pieces together, as an operator. Learned so much. And that's also when I had to pivot around understanding cash and cash flow, where and started to experiment with getting cash or data from the bank, marrying that up with data from the ERP system, and sort of building my own modeling around cash models and, for cash forecasting that really became my CFO dashboard. And I'd have my whole team manage a part of that, which really became a big part of this almost a near real-time FP&A tool, all centered around cash. And that became, just from there on out, really the only way that helped me, which I felt was so needed to really manage the business and manage the business effectively, because I just got so much, insights as to what was going on. So that, and then also the third of those 3 startups, over that 10, 12-year period, one in cloud computing, had a front row seat to the whole digital transformation in IT with a company called Second Watch. We became the first premier consulting partner with AWS back in the early days of the cloud, migrating companies like Coca-Cola and other bigger companies to AWS. And really those two segues, this digital transformational wave and in tech, and then also really steeped in cash management and sort of reinventing myself that was around accrual-based accounting and financial reporting to more of cash forecasting and real-time cash visibility, or as close to it as I can, given even in those days a little more archaic in that tool set, really kind of set up the run to seeing a huge opportunity that we've been really enacting and really driving toward at Trovata.
To summarize your career, as you spend your time in 3 companies learning what not to do by failing, and then you journeyed through 3 companies learning what to do, and now you're pulling it all together at Trovata. Now, I know that's a bit tongue-in-cheek at the end there. One of the things you said was interesting because you talked about you had a FP&A tool that gave you a view towards cash, a real-time view towards cash. And this may be interesting or may not be interesting, but when I think of FP&A, I always think of a focus on income, not on cash, not on balance sheet items. So can you just explain that piece, or was that just an addition so that you could have the liquidity view?
This company, Worldwide Packets, it was a high-profile startup when it started. It started right before the telecom bubble burst in 2000, 2001. I had joined in 2005 when Madrona, the big VC out of Seattle, led a new round of capital to really reboot the company. And so I came in on that wave with a new executive team and was part of that, really pivoting the business around business services. Come in to basically run and in a lot of ways sort of fix a lot of what was broken at the time, and then really set up for this next run that we all saw coming was the opportunity. So part of it was kind of doing my own conventional playbook. I'm in a lot of ways, I was pulling. First thing I would do is set up a data lake, get all the data I could out of my ERP system, and then would use that to get a good basis for financial reporting and really disseminate or democratize that data essentially to the key business stakeholders. And we'd have a really good a cadence at that time. The problem is it wasn't fresh enough or relevant enough. It's old news, and when you need something that when you're moving so fast and you need to get really great visibility, I started to turn to more bank transactions and start to look at, as things are transacting, I could just get better, more real-time visibility. The problem is the bank data wasn't that intelligent. So it's like if I could marry up more of the intelligence from the ERP system, but the aspect of getting, bank transactions that are more, at least even prior day, which is way faster than after month-end close and rolling into your reporting cycle, which is by that time it's 45 days late. Who cares in the startup world? If I could marry that up though in more of this, real-time cash data, and I could categorize it, if I could shape that in more functional areas, almost like I'm doing cash accounting in some ways, that would give me really good insights of what was going on, almost like this real-time cash-based P&L. And if I could do that, I could start to get really predictive and back into my balance sheet assumptions for planning. And then also even, most importantly, driving really predictive insights into my cash balance. And that's how we got really good with all of that. It practically killed me because it took about a year and a half to build. And it was all kind of on the side. I was acting as basically my own, product manager, building these models on the side. But once we sort of, cracked that code and had that, it just became an incredible dashboard and it just great insights of really marrying up the best of both worlds. And then I could see what was going on. What was a lot of the trend analysis, a lot of the things that was happening just became these indicators of where our cash was going. And at that time, even though we were raising, we'd raised, $65-70 million at Worldwide Packets. We were competing also with Cisco and Juniper, the big telecom vendors, and we were innovating, building out a whole new class of product, a world-class product at the time, and we were selling to companies like AT&T and Comcast. So if you think about that, $70 million is still not a lot of money. We spent $25 million just building our flagship product in the space. Every dollar we were burning $2.5 million a month. Every dollar though was crucial. And so we had to be really efficient. And then from there, we just became the way we reported our numbers, the way we just gave insights to the board. We rallied our entire financial reporting around cash metrics. And it was really cool. And I think the biggest part, it just gave me, a tremendous amount of confidence to then making really good decisions and quick decisions, because we had this data that was really fresh, highly relevant, and it just helped us not just be opportunistic and sort of get ahead of the curve, but also it could help us predict if there was a problem. It would be sort of that canary in the coal mine really quickly before we just went down that path and then had to unwind. So it just became incredibly valuable to operate the business. And it was something our senior team, our board, everybody appreciate, because it just gave us that great visibility on what was going on.
So there was definitely faster visibility and better visibility, which helped with decisions. But as we think about, the topic of real-time cash visibility, I think you've covered most of what that looked like, but maybe you could just describe it more fully. When you think of real-time visibility, do you think it just means, do you refer to just cash, or does it include other assets, right? Your overall balances, your forecast?
Yeah, so maybe the quick segue is, Worldwide Packets went on to sell, had a good exit, went on to then start a couple of companies, and I took these tools with me. That became sort of the CFO dashboard, and I think over time just got a little bit better. Would infuse in some additional information to that, and those tools just got a little bit better until part of it was then seeing the opportunity with starting Trovata, and it was really predicated on that. It was predicated on, let's take this to the next level. Let's do this. Could we do it at scale? And we obviously, at the time, these were these collections of models or spreadsheets that I would have or my team would have to help update it, and I would use it periodically, at least once a week, and refer to it. It just obviously wasn't scalable. It wasn't a product. Even though we'd have VCs would get the model and say, hey, I want to send this to all my portfolio companies, because they could have this great way to manage it, because I love getting the insights that you send. Just a better way to kind of see what's going on. And but it wasn't that way. I'd get a call from a CFO from one of the portfolio companies, and he's like, okay, I'm supposed to ask for this special model you've got. What do you got, cooking up? It's like, what? It's like, this isn't going to be, I'm passing around this spreadsheet and then explain it. There's no instruction manual that I could, take me months to sort of write. So it didn't work. And so in that way. And so I think that was the thing, though. What really surprised me, I think, going back after a number of years, and after then a couple other startups, and those sold off and did well, then it was like, then seeing the opportunity for just, the next wave of digital transformation is going to happen in banking and finance. FinTech is off and running. None of that, though, is intersecting on the wholesale side of the bank, or more, mid-market, enterprise, that side of things. And so I started to look back at my days at Worldwide Packets and just started seeing what was in the market, and was just amazed. I couldn't believe that nobody had ever really built anything like this, and there was still such a dearth of tools. I think that was where being able to, build Trovata in a way to bring this, to everybody. Everybody's had this base core need, and then it just depended on, what level of need do you have? Is it really complex? But there is a base level for sure. Cash is king in every business. Everybody needs something, and it's just how much do they have. So I think part of it, though, kind of getting back to your question, the big thesis was, if we could at scale be able to start with that, that base record, that line item in the bank, which is a bank transaction. The nice thing is that that if you see it in the bank, you can count on it. You can bank on it. There's a reason why you say that. Every 99.99% of all business transactions settle in cash. So that they occurred. So if we could start with that base record of truth, a bank transaction, it doesn't have a lot of intelligence, but for sure that it happened. then we could sort of walk up. So if you think of the ocean, if it's water running from the mountain all the way into the ocean, the bank being sort of the ocean of transaction settlement, if we kind of walk up the hills and the valleys and up to the mountains, we could start to integrate, with ERP being a big one of those, but, other systems too, through the whole quote to cash process, and we could start to augment, tie in that record and really go after the origin of that record. What is the origin story of that record? What happened? What was going on? There's insights and intelligence, with the other, ERP and other business systems, and we could start to pull that together as we go. And that's when you start to get, and automate some of the aspects of FP&A where it's all cash based. It's not accrual based, but you get this, super fast real-time intelligence. And that, for me, sort of reinventing myself, from the GAAP world and financial reporting into kind of looking at getting this data much faster, feeling like, the future is unlimited in terms of we could cross over and do something at scale where you're getting that kind of real-time intelligence and that kind of predictive analytics off of that, then it could change the face of financial reporting, let alone, just getting better visibility into your cash from a treasury standpoint.
There's a number of things that you said that are interesting. One thing that your history from a GAAP perspective, I always think about the timing there since we're talking about speed, monthly statements coming out on the 10th or the 15th or maybe the 5th or 4th. It's so delayed. And Treasury is like, prior day is not good enough. We need current day. But this idea of this real time, how real time is real time? Are we just getting faster? Do we need to be almost instantaneous? And, your idea of moving up the hills to the mountains where the source comes from, how do you define real time? And is it different for these different at the bank or at the source system?
A lot of times when you think of building a startup and kind of learning those aspects is I've done for, many, many years, at the end of the day, it's about assessing risk. In a lot of ways, just like in Treasury or in finance, you become a professional risk manager because in building a company, there's just so many moving parts and you've just got to look ahead and you're constantly mitigating all of the things. You need to know what the uncontrollables are so you can start to respond to those. You want to be able to obviously know and have a really solid, deep dashboard of all the things that are in your control. And you now know what those things are so you can impact it. And so many of those is just about mitigating risk and working through that whole process. But I think when you kind of look at, there's two things I think on the, defining real time. One is from that risk standpoint, it's just a lot can happen now, even in a day. You kind of, the world is speeding up massively. You think of, how real time has impacted other areas like, trading stocks. High frequency trading is now table stakes for how it's done in the market in responding to and trading in the market today. If you look at, other aspects of just how we gather our news, stuff hits Twitter in seconds, and we're not waiting till the evening news at 6:00, with Dan Rather in the days, many years ago. So it's like when you kind of just look at the speed of information that's moving so fast, it's like in a lot of ways you just have to have that because that's what the world is now run by. If you don't have that, it's going to be hard to really be proactive or compete in some ways because you're always going to be behind. And if the rest of the business is starting to rely on things that are really, really fast, the Treasury world, the finance department, accounting, it's just how do you respond to that when everybody's expecting you have that same speed of information and you don't? So you just look and feel like a dinosaur. And then when everybody wants you to, if you want a strategic seat at the table, you have to think in that realm and you have to have information that's more relevant. So if you're going to provide, more strategic advice or counsel to the senior team or even to advise on a matter to the board, it's like if everybody's expecting, again, for you to have really, hypersensitive information that's more real time. If you don't, then it's not going to be as relevant. And whoever is making key decisions is going to, they're going to second guess that a little bit, and they're going to look at and need other input. So I think part of it is just, levelizing to the rest of the world, because what's behind all of the transactions ultimately and the cash of what is delivering or driving what you see as cash is all happening so much faster, and you just need to level up to get on the same page as everybody else. And I think the other aspect to it is just the ability to automate. So much is, when you look at so many of the workflows in finance, particularly in Treasury, there's so much that can be automated. And when you're able to put that on a certain predictable cadence or more real time, now you can start to, because that's where it's all happening or headed, being able to start to build around that and automate processes around that is really key. So I think those are two things that it really supports. And yeah, I think it's, whether it's coming in seconds, it doesn't have to be that fast, but as long as it's coming in, I think every hour, every 2 hours, that's kind of where we need to be at this point.
Two things that I heard you saying was, one is, speed matters and quality matters. And those two things create a virtuous circle in a sense of getting it faster, getting better information. That's the demand. It doesn't have to be instantaneous, but whether it's every 10 minutes or every hour, that might be fast enough for today. But I wanted to expand the conversation on that. I was going to ask you about what are the impediments to real-time visibility, and then how do you get past it? But I kind of want to combine that. What are the items that act as blockers to achieving real-time or just much faster visibility? And how do we move past that? Because if you have, I don't know if I want to use your example of the water cascading from the mountains to the hills to the ocean, but if there's dams that are holding stuff that release water every day, that's going to be a gate. That's going to be a gating item. And you might not have, if your bank is only updating some of their systems at night, the fastest you can get it is the next day, because there's a delay there. And same thing as if the information comes in, but your internal process can only update stuff every 4 hours, you're building in these delays. So maybe you could talk to some of the key impediments and how you get past them, or how we think we'll be able to move past these over time.
Normally there'd be 3 impediments, but I'll tell you, I think things are changing a little bit. So the first impediment has always been technology. Do you have the tech to be able to do these kinds of things? That's no longer an impediment. In fact, tech has been ready for a few years now, and it's not a technology problem. A lot of what we all see and experience in many other areas, you just pick up your mobile phone and download an app. Just use something that's more of a modern user experience. A lot of other applications. We look at that and say, well, why isn't that in this space? And a lot of that, it just hasn't made its way. And so that's a big part of what we're doing with Trovata. We're taking what's available and we're applying it to the space. And that looks radically transforming. It is, because it hasn't been applied yet, but it's not unprecedented, because it's been done, in other areas of tech. In fact, it's sort of table stakes in other areas of tech, and we expect it there. It just hasn't happened in this space. So that is no longer an impediment. And perfect example is what we're doing with Trovata. Over the last couple of years, just our traction in the market has proven it now with so many different companies, and our growth is kind of validating that. The second one is more of the banks. And that's been, because again, if you're going to get bank transactions more in real time, then do the banks have the right tech? And traditionally that has been no. They've been behind that. But the changes that have happened in the last few years in wholesale banking have been just incredible improvements. And the progress, even though it's never going to be lightning fast, it's definitely quickening, and it's really exciting to see what happens. So you get a lot of the big banks are being able to, all of them are rallying around APIs. APIs being the way in which they can now deliver next-gen banking services. They can deliver data, and they can deliver with other folks like Trovata, who can bring and update these user experiences and connect to that. So it's a way to just communicate in ways that are very productive to solve a lot of the end user or end customer problems that they have. And their customers have been raising their hand for quite some time. But they're responding, they're delivering the APIs, and that's huge, because that's really that step of transformation now that can carry on and take place. So I would say we're right in the middle of that. So it's not like it's still somewhat of impediments, because it depends on who you bank with, depending on where they are with what APIs, and they're just, in some ways, we're just warming up. We've got some base APIs, but there are more APIs that are coming, and that's, so we're right in the middle of that.
So the tech is out there. Some of the banks are delivering on that. You have this layer that can interact, via APIs that's at the front end or, customer facing. But a lot of banks have a lot of really old tech, fairly old tech behind the scenes that they've got to, if it's going to be real time, they still have to get it so that it can get pushed out to the layer that can interact at an API level. And they may be working with a lot of tech debt that is there. Is that the big impediment?
They're finding ways to work through that. Of course, at the end of the day, banks are going to need to upgrade their core systems. And that's not something that happens overnight. They're still kind of run by mainframe computing, right? So, but if you think of the volume at scale that they operate with, you're having to rebuild from scratch. And these are years and years and years. And then even the migration itself is just so daunting. Can it even be done, right? So there's just incredible risk. So that's what has happened, why it's taken so long is those barriers have been so high that that there hasn't been, that maybe that compelling event that's really caused the banks to have to do it. All of a sudden you look at what's happened in the last couple of years with COVID, I would say that's a compelling event. And so now it's like all of the banks, because if you think of real time and all of a sudden from a risk standpoint, all the customers and clients are panicking and not having great visibility, they need that. They're hollering at their banks that they need that and needing that tech advancement. That's really what's driving a lot of this. But they're getting around it in the, I would say the workaround. They're building data lakes. They're feeding those, doing internal integrations to feed data into those data lakes. They're putting on, building APIs to access those data lakes to be able to deliver that data through the APIs. And so, if you think about it, that needs to get faster, better, all of that and be more efficient internally with how they're doing that. But that's sort of the basics of what needs to take place. They're doing that and it's working. It's now opening up, that handoff, pass the baton to a company like Trovata to then be able to, take that data and do all these things with it downstream for the clients. And the clients are responding. They're just, thank you. This is what we need. And that's evolving. We've got constant conversations about, okay, all of these new things that it's not a lot of stuff that we've done today, but all these new things that now it opens up the possibilities, and that those feedback, those conversations are really lively and really exciting. So those possibilities all of a sudden just become, just open up. The ceiling really starts to go way up. And so that's why I say I wouldn't say it's an impediment. I think it's a work in progress, but it's not an impediment. It's happening today. We're delivering real-time data for several banks to our clients today. And we've got, in a couple of years, we've grown from 0 to, over 130 mid-market enterprise clients. These are big companies. We've got some that are 13, 14 billion in revenue clients. We've got others that are, down to 10 to 15 million and everything in between. But a lot of, most of our customers are kind of in that, $1 billion in revenue, or 300 or 400 million in revenue, or 3 billion in revenue. So companies like Square and Etsy and a lot of tech companies. And so when you kind of look at that, they might have, with Square, we have 18 banks, all normalized, all is part of Trovata, 15 million transactions. And we're able to deliver that with 300 millisecond response rates with natural language search across that entire data set. So those are the things we can deliver, but it doesn't mean that, all APIs or all, with the banks, depending on where they're at in their API journey, just like it was 10 years ago, sort of this journey to the cloud. We're still kind of in the early innings. Banks are starting to get better or just getting their APIs online. So that experience might be a little different depending on who you bank with or the mix of banks that you have. But I think that's just part of that progress. It's changing, and it's changing fast, and it's super exciting. I would say, though, the only real impediment today is just ourselves, people making decisions to kind of move forward. I think given that, in this space, everybody is a professional risk manager, essentially. If you're a professional risk manager, you're probably going to be careful or maybe conservative of when you move into making these kinds of, buy decisions. But so I would say that's becoming the biggest impediment. I think the more people see their peers, the more they see that environment start to change and they're seeing it, then they'll become more comfortable. They'll see more, referenceability of what's happening in the market, and we'll start to see a tipping point and a massive wave. And we're just not there yet. I know it's coming, but I think everybody's going to feel more comfortable here, both from their bank and both on what they see in terms of the tech environment. And it's only a matter of time before that wave is going to hit.
So the tech issue, the impediment of not having the tech has mostly been solved. I mean, there's obviously growth from what you're saying is the banks have it. They're growing and they're maturing. It's early innings if you use the baseball metaphor that you did. And then on the receiving side, there's using the tech, but there's also the mindset of how do we scale, how do we use tools that support real-time, full-blown API use, this faster environment. As you talk through this, these impediments and the mindset, you mentioned COVID. Talk a little bit about how that helped in this visibility. I know it helped in many other areas with payments, with expectations, with work from home and processes. Maybe you could share some of your thoughts in this area.
In the world of tech and adoption, speed of adoption, as an entrepreneur, you always look at the compelling event. What's the compelling event that's really driving adoption of new tech? You look at what we've gone through, over the last couple of years with COVID. I think two things were going on. Prior to that, it wasn't that the world or the speed of information, it wasn't exactly slow. A lot of other areas, of course, were already akin to getting that information really, really fast, right? Again, whether it's Twitter or whether you're going to get, trade on a stock tip. Everything is just moving so fast. And I think, but there wasn't really that you could really get by without having to have your forecasting model updated or some of these processes maybe not as giving you as good of visibility that you needed to. Once COVID hit, though, it really exposed a lot of that. That became the compelling event. It became everybody went into disaster recovery mode. All the way from the board, the senior teams, everybody's looking at the treasurer, the CFO, and needing answers because everybody wants the crystal ball. What's it going to be like next week, or what's it going to be like tomorrow? Do we have to lay off 30% of our staff? What are these? These are really big things and big decisions that we have to work through at the time. Obviously, some companies thrived, some companies are still struggling through this. It's had a huge, profound effect. And then you've got this aspect of the banks now that have accelerated a lot of their fintech initiatives that's trying to avoid these things, and that's become the thing that they're responding to from their customers. So I think this aspect of real time, I mean, it's really forced that mindset that is now part of best practice. Everybody, it's not about just covering the things that need to be covered. It's about being proactive and always looking out, project in various aspects what that means, and having answers. You've got to be able to understand what it means when you have different impacts or aspects that may happen in the market, controllable or uncontrollable. You got to be able to respond and have solid answers of what should be our course of action. How should we respond to that event? And I think that's not going away anytime soon. I think if anything, everybody's realizing they're still not quite there yet. They still don't feel comfortable. But I can just say that when I got to a point where all of this information was able to be maintained and I could get it weekly, the information was a lot faster, which helped us be really predictive and really accurate and precise in terms of our assumptions around cash. The correlation of my confidence relative to that was through the roof. I could actually speak about the business. I could actually speak confidently about whether we do this or that. I could hang scenario planning off of those kinds of things. The level that I could maneuver as an operator was radically different. If you don't have the confidence, you're just tentative. You don't confidently speak about something or talk about something because you're not sure. So you're always speaking in a range of outcomes to hedge. So you're always moving in this world of reactive and just throw hedges on top because you can't ever want to give a straight answer because you don't want to be wrong, right? Or if you have all the information, you're always gonna be doing some hedging and providing, obviously the possibilities, but the band in which you're gonna hedge is gonna go way, way down. So hedge the max, hedge maybe like 10% of what that, and now you can do it because now you have so many answers that you didn't have before that you can just narrow down, and there's things you don't need to hedge because you've already crossed those off the list because you have the information that's eliminated those those things that could occur. From my standpoint, in the startup world, everything moves so fast. So for me, it was an essential tool. I had to get there earlier on in my career. I had to really reinvent myself to sort of get there. But once I got there, it just made the world a difference. And I couldn't operate without it. I still feel the same way. I can't operate without that, that aspect. Everybody wants to operate with confidence. When you don't have it, it's just it's not a fun way to live.
You've reached the end of another episode of the Treasury Update Podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.